The next section, we're going to journalize the entries to record the employer, not the employee, the employer's payroll tax expense for each period in the general journal. SUTA, they're reminding you the SUTA rate is 5.7, FUTA is 0.6. Record debits and then credits as usual, exclude explanations. All right, so we're going to record the employer's payroll tax expense for October 31st. Remember, it's the employer, not the employee. So let's quickly review the journal entries when recording payroll. So here is a screenshot of one of the PowerPoint slides. Notice this is journal entry 1. So payroll journal entry 1, in which we're recording the salaries expense and the employee withholdings. So this is for the employee. So we have the gross wages here and then all their deductions. And you subtract the deductions from the gross pay, gives you the net pay. So, but we're not going to record this transaction in this problem. In this problem, they just want you to record the employer. So let's look at the employer journal entry, which is journal entry number 2 in doing payroll. So for the employer payroll taxes, we're going to debit payroll tax expense, and then we're going to record the OSTI tax that the employer has to pay, the Medicare tax that the employer has to pay, and the FUTA and SUTA that the employer has to pay. Now this problem is emphasizing the 941. And do you remember what the 941 taxes are? They're FICA, FIT. So we've got OSTI, Medicare, and then FIT. So in this problem, we're going to ignore FUTA and SUTA because the authors just wanted to make this problem easier for you. So when we do this transaction, we're going to skip FUTA and SUTA, but don't get confused. Don't think, well, why are we not paying those? Because in the real world, we would have to pay those as the employer. So we're going to be debiting payroll tax expense and then crediting OSTI payable and Medicare payable. So we've got payroll tax expense, and then we're going to do OSTI payable, and we're going to do Medicare payable. And now how much are the amounts? So to find the amounts, we have to go back up here, open up our table. And notice this says we're doing October, so we have to look up here in October. And so for OSTI, the employees paid a total of $633.64. Now remember, the employer has to match that. So I'm just going to copy that. And then for OSTI payable, I'm going to increase it. Remember, payables increase with the credit. And then we need the Medicare. Medicare is 148.19. Copy and paste that. And then the payroll tax expense is just going to be adding these two numbers up. So that gives us 781.83. Now they want us to record the same thing, but this time for November. So we're going to have payroll tax expense. We've got OSTI payable, Medicare payable. So we're going to go over here to November, and we're going to copy and paste OSTI. Now remember, this is the amount that the employer is going to have to pay because the employer has to match OSTI and Medicare. Then we're going to add up these two numbers, and that gives us our payroll tax expense. And the reason we're debiting this is the expense is increasing, and as you know, expenses increase with a debit. So this turns out to be 817.02. And then finally, we're going to do December. So we're going to scroll down over here, find December. Let me plug in the accounts first. Payroll tax expense, OSTI payable, Medicare payable. And then for OSTI, we got 716.1. And then copy and paste Medicare 179.8. And we're going to add up the credits. to give us a debit of what? We got 895.9 or 90. You can leave off the 0 if you want, doesn't matter. And as you notice, it plugged the 0 back in there for us just to make it look nicer. All right, so that was recording the employer's payroll tax expense. Now it says, part 3, journalize the payment of each tax liability in the general journal. Record debits and credits. Record debits and then credits. Exclude explanations. First, journalize the October's tax liability in the general journal. So now, what taxes are they talking about? Remember, this is Form 941. So the taxes involved with the 941 are FICA, FICA, FIT. I say FICA twice because remember, to remind you that there's FICA for the employee, and then there's FICA for the employer, and then FIT. So we need to pay the 2 FICA taxes. And so what we're going to do, like for example, this payable here, when we pay this payable, we need to eliminate the payable. So how do we eliminate the payable? We need to decrease it. How do you decrease a payable? In other words, a liability, you debit it. So we're going to debit OSTI payable, that's one of the FICAs, and then Medicare payable, and then FIT payable. And then when we pay it, we have to lower our cash. So now we just need to figure out, well, how much is that amount going to be? So we go back up to here. We open this up. And notice we're doing October. So we're going to look at October. And let's look at the October's OSTI. So this 633.64 is the OSTI that the employee paid. Now remember, for Form 941, we pay FICA, FICA, FIT. And again, I say FICA twice because we got the employee portion, 633.64, plus the employer portion, again, 633.64. So I'm going to have to double that. So I'm going to plug in 633.64, which I got from right here. Multiply that by 2, and that gives us 1267.28. So shoot that into the cell. So we are now lowering OSTI payable because we're going to pay that OSTI payable to the U.S. government. Now we need to figure out the Medicare amount. So the employees paid a total of 148.19, and the employer is going to have to match that. So I need to double that. 148.19 times 2 gives me 296.38. Plug that in here. Medicare is going down by that amount, Medicare payable. And then we've got FIT payable. So remember, 941 taxes are FICA, FICA, FIT. We only say FIT once because FIT is only paid by the employee. So I'm going to copy that, paste that. And then our cash amount, we're just going to add these up. 1267.28, 296.38, 1495. Add those up and we get 3058.66. Okay, now we're going to do the same thing, but this time for November. So we have to lower OSTI payable, lower Medicare payable, lower FIT payable, and then we will lower our cash. So we need to go back up here to the table. We're doing November, so let's look at November here. So for OSTI, we need to double 662.16. So if we double that, that's 1324.32. And then for Medicare, we need to double 154.86 because remember, we're paying both the employee portion and the employer portion. So 154.86 times 2 is 309.72. And then fit payable, we got 1627. Then we're going to add these three numbers up, add up the debits. That equals our credit of 3261.04. Check our answer. Fantastico. And then our last one, we have December. So we need to get rid of OSTI payable. We need to lower Medicare payable. We need to lower a FIT payable. And then spend some cash to get rid of those debts. So OSTI for December, we've got 716.10 times 2 gives us 1432.2 or 0.20. Then we got 179.8 times 2 gives us 359.6. And if you really like to put in the zeros, you can. And then we have to get rid of the FIT payable, 2044. Add these three debits up, and our cash is going to be going down when we pay these taxes, 3835.80. Well done. All right. Now, it says journalize the FUTA and SUTA payment as of January 3rd. Assume that the FUTA and SUTA taxes for the first 3 quarters of the year have been accrued. In other words, the FUTA payable and SUTA payable were already increased for the previous quarters and will be paid in January. So in January, we have to lower our FUTA payable and we have to lower our SUTA payable, and then we pay them with cash. And then why will we be debiting our FUTA payable? Because remember, it says that assume the FUTA and SUTA taxes for the first 3 quarters have been accrued. In other words, those liabilities have been increased. And how are liabilities increased? They're increased with a credit. So when we pay it, which is what we're doing now, it says a payment, we need to lower those payables. How do we lower a payable? With a debit. So now, let's go to our tables and see if they have a nice handy-dandy SUTA taxable and a FUTA taxable column. Do they? No. They should. That would have been nice. It would have made things easier. So let's review how much of FUTA and SUTA is taxable. I believe it's in here. So it doesn't remind us, it looks like it does not remind us that the FUTA and SUTA limit or wage base is $7,000 per employee. It tells us our rates, 5.7 and 0.6%, but it does not remind us that FUTA and SUTA taxable for each employee per year is $7,000. So let's see if everyone made over $7,000. So it's the end of the year. We're looking down here in December, and their cumulative earnings for the whole year, everyone is over the 7,000 wage base for FUTA and SUTA. So how much is taxable for Paula? 7,000, because she's over the limit. How much for Joe? 7,000. He's over the limit. Harley, he's also over the limit. So the amount of taxable is 7,000 per person. So 7,000 times 3 is 21,000. So let's get out the calculator. So we've got 21,000 taxable. And then we're going to multiply that to remind you where to find the rates, if you forgot. FUTA is 0.6%. So 21,000 times 5.6% is $126. So we're going to clear that, type in 21,000 again, taxable, because food and SUDA both have $7,000 wage base limits per employee. And we're going to multiply that by 5.7%. Oops, 1197. So let me clear that again to show you. 21,000 times 5.7%. So that gives us our 1197. I'm going to shoot it over into that cell. Clear it. And then the amount of cash going down is 126 plus 1197 gives us 1323. So we're eliminating our FUTA payable and SUDA payable because we are paying FUTA and SUDA. Well done. Now in the next video, we're going to start the Form 941.